All right, guys, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and it is Wednesday, May 2nd, Fed Day. So, a lot of, well, not a ton of things to talk about. We could kind of be a little bit shorter than usual, actually, about it. But while I've got the volume up here today, SPY's been kind of just running at low volume. This is the volume for all the ETFs that are out there, just to kind of take a gauge or pulse of the action. But 20% less than normal volume today. EM right on the screws. GDX, which generally trades a little bit more. Gold moves around on Fed days, about 20% more than usual volume. Don't see a lot of other really volume movers. JNUG, which is another, which is a leveraged gold miner name. Yeah, IAU, which is gold. So I guess there was a little bit more volume in gold and maybe some emerging markets with the move in the dollar. You could see VWO also traded right around average volume today. XLV traded about 40% more than the average volume. So just to kind of give you just a little bit of a sense about what the volume was on Fed Day, was not, I would say, overall terrific. So what did we learn out of today? I think there's a couple takeaways. Well, if you attended last night's webinar, which was a member-only webinar, but you can email me if you want a copy of it. We're just kind of talking about, I was comparing going into the Fed meeting from what we saw last FOMC, which was on 3/21, and what I noticed was the day before we saw what I think was short covering on, this is back on 3/20, and then we started to go higher last Fed day, off, right after 2 o'clock, and then we kind of got smoked. And then the market presumed to sell off 4% the next couple days. So what I talked about in last night's webinar is this is what I would be watching out for, because yesterday, I wasn't sure if yesterday was real. We obviously bounced yesterday and actually closed on the highs, but it could have just been short covering, which I think it was. I think that's what it was yesterday. I don't think it was new investment. I think it was shorts covering, because there was an event, which is the Fed meeting, and nobody wants to have a lot of risk going into a Fed meeting. So what did we get today? Basically the same exact price action as what we saw last time. Once the Fed meeting was over, so I'll go back to the 5-minute here just for a second. We rallied a little bit, again, exactly like we did last Fed meeting, and then the sellers reasserted themselves, and down we went. So, I 1 hour bar before I go back to the daily chart, we're back to where we were, kind of the lows of the week, and I would really watch out. I think tomorrow and Friday, I'm not going to say history is going to repeat. But if the shorts want to reassert themselves, there goes the 200-day moving average. You could also see that you have a bearish cross on the MACD. So what did I do today? I had some really nice trades going into today. Devon Energy, which was was one of the best looking trades in terms of option activity over the last couple weeks. They just continuously bought calls in that. That was a trade that I had on for May. They bought in October. I took off my May calls and went into October, and big winner for the trading room, I think, today, because I think a lot of people took that, and then took some targets today. I'm still sitting a piece of that. I want to see where it goes, but I've taken enough targets. Also, Yandex was a nice winner today too. I did, considering that I think that I have a feeling that we might go lower unless something changes here in the next couple days. Besides those nice looking trades that I just pointed out, I took a lot of trades off at the end of the day. I don't like how this market looks. I was listening to Bloomberg, and I'm not putting anybody down, but Bloomberg was kind of just saying after, maybe it was something in the language of the FOMC. No, I don't think so. I don't think there was anything wrong with the last FOMC language. They didn't really, nothing really has changed, I don't think. So you could try to come up with an excuse, but there's a buyer's strike right now, and the sellers have control. The sellers are pushing to the downside, and there's nobody who's coming in. Another evidence of that is, I would say traditionally on Fed days is, there's some call buying that happens in various different groups. There's nothing after 2 o'clock today. And again, today the Fed didn't. It was kind of a what do they call it? Not a non-event, but not a live meeting. There's no press conference today, so there wasn't really that much to kind of hesitate around, and there's just nobody's buying. Nobody's picking spots and buying names. I mean, for the first hour after the Fed, there was basically no order flow on either side, really, on put and call side. So it just does not look like anybody really wants to start putting money to work right now. So I don't know when that's going to happen. And I think that's the main story. So again, you can come up with excuse after excuse, which certainly I've tried to rationalize this price action, but I just think investment is not coming back into this market. And I track this on a day-to-day basis with ETF fund flows. There's no money. It just seems to kind of be sloshing around a little bit and rotating around amongst some sectors. But it doesn't seem like there's the big commitment to buying, and even on the dip days. So, I thought IWM looked okay. Just to kind of look at some other areas, just besides. At one point, IWM was up 1% today, and it gave it all back. So, right around 2 o'clock on that Fed meeting, you had a full bar there on the IWMs, and so they're kind of right in the middle of this value area. So they look like they were going to be the star today, and maybe kind of give us a sign that we're going to go higher, and maybe break higher. But they look at what they did. So there's no takeaway there either. Qs, pretty ugly. They got up to the 50-day moving average back last week, failed. They failed to go, closed on the lows the other day. Yesterday had a nice day. And that's basically, I'm sorry to be so negative, but this is basically how a bear market works. And I know we have not broken the 200-day moving average yet, but lower highs and lower lows, which we have not been making lower lows yet. We've been holding here, but we could definitely say we've been making lower highs. What bear markets feel like, which I got the question the other day. What does it mean? Because I've traded in several bear markets. It means that basically what we're seeing is either you come in, futures are bid up 30 or 40 basis points, and that's the high of the day. Any type of rally that you see usually gets squashed. It's very short-lived. Everything to the upside is very short-lived, like this. And then for no reason whatsoever, we just turn on a dime and go the other way. That's what a bear market feels like. The other thing that's also symbolic of a bear market is just everything goes down. So you could try to pick some things that are going to be the outliers, but it's just that much hard. It makes trading that much harder. So what did I do today? We talked about midday, kind of how to prepare for this. I bought some SPY out of the money puts, and I said I would add to them if we looked like we were going to start to turn and go lower. I did that. So follow the plan. I talked about having a plan and being ready for this in last night's webinar, and that's all you could really do is kind of plan for this and then take actions when they see fit. And other than that, I took off about 4 or 5 trades today, that long swing trades that I thought might have a chance to kind of come around a little bit. Today's option activity, I could go over that, but again, as I've been saying now for a while, is the option activity. Nothing wrong with the morning's option activity. Maybe a little bit quieter than normal, but there was PayPal calls, even though PayPal got smoked on this Amazon story. There was a few other trades that were notable for the day. There was actually a little bit of call buying in XLI, a little bit of call buying in Caterpillar. And that's really going to be the plan going forward, is just to kind of be patient and wait for when things really get dismal on the sentiment side, and then wait for kind of a squeeze, which you will get in bear markets as well. So again, I shouldn't be talking about it yet, but it just kind of feels a lot like it. I hope things turn around. But for the time being, I'm going to be mostly in cash until this thing shakes out. I'm not going to try to fight with this tape every day and fight a losing battle if we continue to disintegrate and do this kind of thing lower. We're going to be at the 200-day moving average. Again, I see a lot of bear signs. We'll see what happens for the rest of the week. So that's the best I could say. Be very careful with this market right now. Have more cash so that you're ready to deploy when things get really oversold. But we are not there nearly yet, and it should make for a very interesting end of the week. Have a great night, everybody, and see you tomorrow.